Hello traders. The month of May 2025 is now behind us. I'm sure you've heard about this saying that sell in May and go away. Well, that didn't work for Indian equity markets last month. But what has happened is the market has gone into a contraction mode, which means very soon it's going to give us a breakout. A breakout in which direction is the million-dollar question. So come, let's take a look at the Nifty charts. Let's take a look at the various sectoral charts as well and try and figure out that when and in which direction the market is very likely to give us that breakout. All right, so here we are, our usual next screen wherein we have the weekly charts on our left and the daily charts chart on our right. This is the Nifty futures, by the way, and we are still looking at the Nifty futures giving us a 50% retracement of the previous fall from the weekly time frame. It's kind of giving us a decent zone of resistance. But the month had come to an end, so why not take a look at the monthly charts first? So I've changed the weekly to monthly, and what we can see is the very same retracement on the monthly time frame after this 6-7 month fall from the benchmark index. The trend is just trying to improve on the monthly. I like the fact that the Heiken Ashi has turned into a positive Heiken, a bullish Heiken, which is good news. The EMA of RSI, which we're using for momentum, has not turned positive yet, so it's going to take a little bit of more time. So a little bit of hesitancy is there. There are signs of improvement. There are signs of still weakness. So not a table thumping positive or a negative from the monthly charts. Going back to the weekly time frame, I just spoke about this resistance. So this is extremely important, and this is around that 25,200 mark for the Nifty futures, by the way. Trend is fine. It has improved. Momentum is also fine. It has improved. So the bias is on the positive side, but we need that breakout. With that logic, if we take a look on the right hand side, that is the daily time frame, and here you will see that it is contracting, and this contraction is taking a descending triangular kind of a shape wherein the highs are getting lower. The lows are kind of fixed, which is at the previous breakout point. If I micro take a look at it, we have a negative Heiken and then some pullback. The momentum has slipped. The trend structure is still positive. It's kind of jumbled up, to be honest, and that's why anything can happen. 50-50. Yes, it will require this breakdown for further weakness. And yes, it will require a breakout above last week's high for further strength. So if I share two levels with you for the Nifty futures, it's going to be last Thursday's low. To be exact, it's around 24,770. The index needs to slip below that, and a close below that will definitely lead to further weakness. In that case, these kind of lows will be easy retest, no problem. But on the upside, it needs to gather more strength. I have a bearish Heiken 2 days back, so I need to reverse that for further upsides. And for that, 25,200 breakout is important. So 25,200 on the upside, 24,770, 750 on the downside. These are the two immediate levels. As long as the market stays within that range, it will be difficult to figure out what is the directional clarity. And so we will be looking for longs and shorts both, unless we get that proper breakout. Now, if we take a look at the rest of the sectoral charts, we might get some Q. And for that, I always share the RRG graph with you, right? I have the RRG graph thanks to the Strike Analytics page, and we will use the benchmark as Nifty 500. That's one. We will come to the daily time frame and increase it to the weekly time frame. Will give more clarity and understanding. And we're going to increase the count from 5 to 13. 13 because if we go to the charts from this particular low, It has been 13 weeks since the market has been in a kind of a bounce back mode. I'm not considering this low, I'm considering this low. Why so? Because this was more like a one-off, it just lasted for a few seconds. And so I'm considering this move into my perspective as well. With that, if you take a look at the RRG graphs and if I sort it in terms of percentage change, within the leading quadrant, we will get PSU Bank, Nifty Bank, Oil and Gas and FMCG. The banks, the financials are the most important 40% weightage, isn't it? Within which, if you take a look at the PSU Bank, that has started to pick up. And I like the angle of the PSU Bank. It is moving left to right. It is also moving down to up. Means it is gaining both relative strength and momentum of relative strength. Pocket of strength. Over here, if you get any long setups, one should take it. What about Bank Nifty? If you remember last week, I had discussed this with you, that the Bank Nifty is losing vertical distance. Can you see this over here? It is losing vertical distance. It is in the leading quadrant, but it's losing momentum. And if you take a look at the private bank and the financial service, they have just nudged below that leading quadrant and has just gone to the weakening. This weakening is primarily because of the fact that it's losing the momentum of the relative strength. So strength and momentum is improving in the PSU banking pack space. And the same thing is kind of losing, the momentum is losing, not relative strength, within the financials and the private bank. Now, both of us know that the Bank Nifty is private bank heavy, right? And so if we take a look at the charts, we should probably see an uptrending index chart, which is now has gone range bound. So with that, let's go to trading view and first take a look at Bank Nifty. And this is exactly what we see. Ascending triangular kind of a formation, went up to an all-time high. The CNX Finance and Bank Nifty, these were the only two sectoral charts which managed to do that recently. So there's enough relative strength, but the momentum has kind of going away slowly. Now forget the RRG graphs. RRG graphs are predominantly positive, which tells us that if these charts, the Bank Nifty, the private bank, the PSU bank, as well as the CNX Finance, if this financials pocket give you any kind of a positive move, it's worthwhile taking it because it has got relative strength. That's what RRG graph is telling us. With that logic, if we take a look at the charts per se, okay, no problem, trend, icons, no problem. Let's do one thing. Rather than the daily chart, we should first take a look at the monthly. Not bad. Okay, it's got a slant divergence on the monthly, so choppiness is going to come. It's not going to be an easy ride. Weekly looks very, very well structured with a momentum slowdown. Looks okay. Weekly, no problem. Now, when we come to the daily, we clearly see a breakout pointer. We've got positive EMA, Heiken supportive, super trend supportive, EMA of RSI just nudging up a little bit. Not bad. Predominantly positive Bank Nifty. That's why predominantly positive private bank. And we will also see a predominantly positive CNX Finance. All that these three sectors need is this breakout. So do not try and go short on this in this pack. It's the PSU Bank, the PSU banking sector index, which is far away from its all-time high, but it has been performing really good. Little bit stretched. It had a good move on Friday, but stay predominantly bullish. Do not chase longs. And so I have marked them green because this is where if you see bullishness, if you see breakout, it makes sense. It has the support of the relative strength from the RRG charts. Going back, let's take a look from leading, which are the ones which have come to weakening. And in weakening, we saw CNX Finance and private banks, and that's more or less it. There's none other. What about the other quadrant? That's the one on the left, which is the lagging. And this is where we have healthcare and pharma. Healthcare and pharma are both tricky. If you remember, last week also I discussed this with you that both the RRG graphs of healthcare and pharma is traveling right to left, which means it is losing relative strength, and it's also angling down, which means that it's losing momentum of the relative strength also. RRG graph of CNX Pharma and RRG graph of healthcare tells us that this is a weakling, a relative weakling. So if the chart shows you signs of weakness, breakdown, etc., and if you are a derivatives trader, look for shorts. If you're a long only trader, stay away, don't buy here. That's what RRG is telling us. With that, if we come to the charts and let's take a look at CNX Pharma, let's take a look at the monthly charts and we see, okay, nothing much. We see that the EMA of the price and EMA of RSI is diverging. So volatility is going to come, choppiness is going to come our way. Weekly, not bad over here. Okay, improvement over here, kind of choppy. Clearly, we do not have strong conviction, to be honest. It has created a breakout zone for itself, which is very, very clear. If we take a look now at the daily chart, I'm talking about this zone. Closer look and we see 4-5 days of crazy small range bound choppiness. Momentum is slipping a little bit. Trend structure is kind of okay. A further closer look and I see a bearish hike followed by consolidation. So very clear, make or break. Weekly is kind of mixed. Monthly is improving. RRG is not positive at all. So if I put RRG in front of my analysis, then I should be looking out for this breakdown. But price is ultimate. We can also get this breakout. So stay, keep your eyes open and look out 50-50 chances. Let's say 55-45. Let's give the RRG some benefit and let's see whether the pharma breaks down or not. The other sectoral charts which is there in the leading quadrant are the consumer durables, metal and IT. Let's talk about IT first because after the financials, IT enjoys a pretty good weightage, right? And it's been underperforming for a very long time and recently it has picked up momentum of relative strength. With that, if we take a look at the CNX IT index, we will see that, yes, it's given us this bounce back. Let's take a look at the monthly because the monthly charts will give us some clarity from a slightly larger point of view. This is not positive. This is not a very positive monthly chart. Series of 2 bearish hike followed by a bounce back. It's also an HHGB. EMA turning down, EMA of RSI red and falling. This is a bearish combination for us, which means if monthly low gets breached, it's going to come down. It's likely to come down. Weekly is not giving us any such signs. Weekly is a sign of improvement, bullish hike-ins, probably a 50% retracement of this fall, and it's okay. It's just slowing down. And that slowdown is getting reflected on the daily, a symmetrical triangular kind of a formation. Predominantly positive, but recently with Friday's fall, the bearish hike worries me a little bit. Monthly is negative. Monthly is negative. Weekly is slowing down. Daily just nudging down a little bit. It's too early to comment. So if the market breaks down, considering the banks and everything are placed positively, keep an eye on IT below Friday's low on the downside. But nevertheless, remember one thing, we will definitely go through some choppy period. For the IT, I would say Thursday is high, Friday is low. Very clear. It's an yin-yang kind of a pattern for me. I like to call it yin-yang, wherein we have a positive hike immediately a negative hike very difficult to create a view. But because the monthly charts are negative, because the RRG is in the weakening, in the lagging quadrant, it makes sense to put it under the negative category. We'll see. The other is the consumer durables, which is very similar. It's gaining momentum of relative strength. And there's metal, which is difficult, which is different. We'll come to metals a little later. Let's get done with consumer durables. We come to consumer durables. On the left-hand side, let's take a look at the monthly. And the monthly is also negative over here, flattish over here, negative with the super trend, couple of pullbacks. Okay. 50-50, negative, trying to improve. It's a chart which is trying to improve. Take a look at the weekly, good looking trend reversal, good looking momentum reversal, positive hike-ins, giving an HAGB, which means weekly should give us this breakout. It's got a polarity kicking in here, but from the weekly, if last week's high is crossed, you should expect upsides. Okay, we've got that level. Come to the daily, negative, sloping down, bearish Heiken, negative. This is not a good looking chart. So again, the same logic, last week's high for consumer durables as a breakout, and Friday's low, which is very close to this low as well, is the breakdown point. Monthly chart, not so great, 50-50, so anything can happen. Consumer durables is in the weekend, is in the lagging quadrant. So I would again put this in that category. More bearish, let's say 60-40, 60 on the bearish side and 40 on the upside. For the bearishness, it does not have to fall much. Let's understand the logic. For this particular chart, you closed over here. This is your breakdown, support breakdown point. So a little bit of fall and a breakdown will come and probably some orders will get triggered. So breakdown is nearby. On the other hand, if you want to break out, you need to travel quite a distance. It will be weekly high, right? So that's why 60-40, more on the bearish side and less on the bullish, 60-40. Now let's come to the metal. And so, by the way, sorry, before I take you to the metal, I've marked this red also. Metal has been in a hurry. In just 13 weeks, from improving to leading to losing momentum of the relative strength to losing relative strength and weakening, and now it has landed in the lagging. So in just a 13-week span, it has touched all the 4 quadrants. So it must be doing a lot on both the direction. Metals. And we see on the monthly chart on the left hand side, let's change this to monthly. Not good, flattish, completely range bound for what? Almost 4 to 5 months now. I will, it's a split decision over here, 50-50. Very difficult to take a call from these kind of charts. Weekly, improved. Actually, weekly charts are positive. All right, so not bad. In the past, you have corrected a couple of times from these kind of levels. Okay, what's happening daily? Positive, positive. My indicator is clearly reflecting a negative divergence happening there. Right at these zones, no negativity on the daily time frame. It's a little stretched. Monthly not that good, weekly, daily not that bad. Daily little stretched. Daily has a divergence which I should pay attention to. So I don't think it makes sense to chase this on the upside, and neither is it ready to go short. And that's why I've not marked green or red. I've just kept it blank. Means I have closed here. I do not want to chase the breakout on the upside, long trades. And my charts do not have enough information to go short either. There's not enough bearish information. So I'm going to stay away from the metals. Right? Let's see what happens next week. And accordingly, we will position ourselves on the metals. Now the final, which is the improving. We have the reality there. We have the energy there. And we have the auto. Let's start with auto. Auto has been little choppy. From improving, it couldn't go to the leading quadrant. It came down to lagging, and now it's back to improving. Again, a bit of choppiness probably we will see here. Come to CNX Auto on the left hand side. Let's start with the monthly chart. And we see a bullish Heiken, not bad. Trend wise, momentum wise, it's not that supportive. It's a bounce back chart. And weekly will clearly give you that bounce back. We had this polarity drawn, and that's exactly from where it is cooling off. Take a look at the trend, take a look at the momentum, take a look at a pullback. This is a bullish chart. And so we need the last week's high breakout as a bullish chart. But it's a little stretched, right? You can see the extent of the move. Come to the daily time frame, and the daily time frame's momentum is slipping. The daily time frame's trend is okay. If you take a look at this EMA and this EMA, they are diverging. So it's going to give you volatility. Closer look, you will find there was a bearish hike in 2 days back. And then it's back to these kind of lows. So from the shorter time frame, it is a breakdown candidate. From the larger time frames, it is at resistances and it's a little stretched. I've put auto in the negative quadrant, marked it negative, primarily because of this bearish hike in and this divergence between the two EMAs. I have the banks and all those guys in my positive for my breakout on the upside, and they look like a classic breakout candidate. However, if the market comes down, I'm looking for some areas where I can add some shorts from a futures trader point of view. If you're a long only trader, stay away from these sectors. So if you're a long only trader, I would suggest auto, you should stay away. The other was realty, and the RRG chart of realty was going up and gaining momentum for quite some time. And it's gone into the improving, it's rising, it's left to right, and it's down to up. It's a good looking RRG graph. One should be looking for longs. Let's take a look at the monthly again, and okay, it's a bounce back month. Monthly low is going to be important as a support. Weekly charts, pretty clean, no complaints. This polarity is what it has to deal with. And yes, when we take a look at the daily, this is where we see series of positive icons, and towards the end the shadows have emerged on both the sides, and the bodies have started to shrink. Signs of slowdown. Of course it should slow down. Bullish chart, yes. Should I go long? No. It'll give us a sense that you're chasing. Should we go short? There's nothing to go short based on what we will go short. So I have purposely kept it blank. Doesn't make sense to long. It always makes sense if it comes down and give us a fresh move on the upside, then we will look to go long on the reality. So staying away from reality. And the final one is energy. Now energy, we remember, was traveling left to right, which is a good thing. It's gaining relative strength. But off late for the last 3-4 weeks, it's falling up to down, which means it's losing momentum of relative strength. Should be predominantly bullish. Let's take a look at energy. Energy on the left hand side chart first, monthly bounce back, not a very good looking in terms of trend or momentum. So monthly low is going to be important. I'll just add one liner here. On your monthly charts, if you find any chart, sector chart or stock chart, which is predominantly negative, must have given you a 1 or 2 month bounce back, right? And if whatever momentum indicator you are using, if they are still negative, in these kind of charts, your last month's low is going to be supremely important for any further breakdown. So keep that back of your mind. 1 month fast forward, when we come to the end of June, if we see any sector or stocks which have broken below the low of May 2025, that's a weakling. All right. With that, let's come to the weekly. Good looking weekly, no problem. Come to the daily, and good looking daily also. There was a bit of a divergence here, which got kind of negated, no problem. But I would not want to chase this chart, especially when there's a bit of a polarity playing out here. It's a bit of choppiness has come up, and I would, not mark anything on energy. I would just like to observe a little bit. You see, all these observations, what will energy do and what will pharma do and all those, you'll agree with me, has a lot to do with the behavior of Nifty. So Nifty has gone into a range, a triangular kind of a range, and it requires a breakout. It is also a little tired and respecting the 50% retracement level. Banks, financials are well poised for that breakout. It needs that push, but there are few sectors which are also relatively weak. So prepare yourself accordingly. Figure out what's the call on the Nifty and the sectors. And the next step that you should do is go within the sectoral list, like a CNX Auto or a PSU bank or a private bank, and figure out which stock, especially amongst the large caps, the heavyweights, which stock within that particular sector can give you that move, right? So that's the prep, that's the preparation for the next week. Let's see how much of this preparation or this analysis plays out the week ahead. And accordingly, you should position yourself and your trades, right? Thank you for watching my videos. Share your thoughts and comments. Let me know if there's anything more that I can share so that it helps you in your analysis and in your trades towards the end. That's what matters, the trade, the final trade, right? All right. Thank you, everyone. Take care. Goodbye. Trade well.